Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. Early results of America's historic elections are trickling in, with Republican candidate Donald Trump leading the race for the White House. HSBC Philippines believes that the country has the potential to transition from ASEAN's rising star to superstar. Homegrown fast food giant Jollibee is set to gain full ownership of the Hong Kong dim sum restaurant chain Tim Ho Wan. And Megaworld's president Lourdes Gutierrez Alfonso makes it to Forbes Asia's list of Power Businesswomen this year. First, a look at the financial markets. U.S. stocks closed sharply higher. All three main indices moved up by at least 1% after new data on the services sector signaled a solid economy. Still, investors are bracing for a volatile trading week as voting gets underway in the country's extremely tight presidential election.
Obviously, there's a lot of anticipation and anxiety around the election, the possibility that we won't know the result first thing in the morning. But the thing is, you have all of this anxiety about the election set against a very favorable backdrop for the market. Strong earnings, soft landing, Fed looking to cut rates this week as well. And so in absence of some other catalyst, I think the trend is going to be higher. And certainly with a favorable seasonal backdrop as well. So I think you have probably a light volume day, but in absence of something negative, the trend is higher right now.
Over in Europe, markets ended mixed as traders await the results of the U.S. elections. The FTSE 100 fell by 0.1%, while the DAX was up by 0.6%, and the CAC 40 higher by 0.5%. Here in the Asia Pacific, markets opened higher this Wednesday morning after Wall Street surged overnight. Japan's Nikkei 225 is up by 0.7%, the Kospi up by 0.2%, and the S&P ASX 200 over in Australia is up by almost 1%. A historic day in America as millions cast their votes in one of the tightest presidential races of modern times. Early election results are already coming in, with Donald Trump leading the poll. Trump now has 90 electoral votes, while Harris has 27. They each need 270 electoral votes to win the presidency. Trump voted in Palm Beach, Florida, saying afterward that he feels very confident. He also vows no violence from his supporters.
I don't have to tell them that there'll be no violence. Of course there'll be no violence. My supporters are not violent people. I don't have to tell them that. And I certainly don't want any violence, but I certainly don't have to tell. These are great people. These are people that believe in no violence. Unlike your question, you believe in violence. If I lose an election, if it's a fair election, I'd be the first one to acknowledge it. And I think so far, I think it's been fair. I think there's been a lot of court cases. Both sides are lawyered up.
Harris, meanwhile, visited the headquarters of the Democratic National Committee in Washington, D.C. on Election Day, where she spoke to voters over the phone. Harris also voted by mail in her home state of California.
This truly represents the best of who we are. Just reaching out to folks, letting them know that we're all in it together, reminding them of the power of their vote, through their voice. This is just the best. And I just thank you all so very much.
Here at home, HSBC Philippines is optimistic about the country's potential to transition from ASEAN's rising star to, quote, Asia's superstar. The bank expects the economy to grow by 6.4% next year and accelerate further to 6.7% in 2026. Now, that would make the Philippines the fastest growing economy in the ASEAN. HSBC says key factors driving this growth include the country's young and growing workforce, strong inflows from overseas Filipinos, and continued policy reforms and infrastructure investments. To further unlock the Philippines' economic potential, HSBC Philippines President Sandeep Upal underscores the need to address infrastructure challenges and the need to effectively implement trade liberalization measures. On another front, Jollibee, the homegrown fast food giant established by Tony Tan Kat Yong, is set to gain full ownership of the Hong Kong dim sum restaurant chain Tim Ho Wan. This after Jollibee entered into an agreement with Titan Dining, which operates the Michelin-starred brand. Under that agreement, Jollibee will purchase the remaining 8% stake held by other investors in Titan Fund for 20 million Singaporean dollars. Jollibee already holds a 92% stake in Tim Ho Wan. With approximately 80 locations across 11 countries, Tim Ho Wan will serve as the flagship brand for the Jollibee Group's Chinese cuisine segment. The restaurant chain is celebrated for showcasing Hong Kong's iconic dishes like barbecue pork buns, steamed rice rolls, and pan-fried turnip cake. Now, International Container Terminal Services, or ICTSI, delivers a record-breaking performance in the first 9 months of 2024. Its net income surged 31% year-on-year to an unprecedented $633 million. Revenue rose by 14% to $2 billion. For the third quarter alone, the global port operator reported a net profit increase of 24% to $212 million, with revenue climbing 16% to $692 million. Enrique Rizon, who leads ICTSI, attributes the growth to their diverse and resilient international portfolio. Now, the Ramon Ang-led San Miguel Brewery also reporting robust financial results this year. For the first 9 months, the company's net income was at 23.4 billion pesos. That's a 37% increase year-on-year. SMB says this growth includes dividends of 7.4 billion pesos from its international subsidiary. Domestic revenues, meanwhile, climbed 2.7% to 98.8 billion pesos. Notably, beer sales volumes also surged by 3.9% to 1.9 million from July to September. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now at 9:42 this morning, the PSE index is trading to the downside on some profit taking. We're down by about 0.2% to 72.46. This after gaining 1.7% yesterday to 72.58. Right now, the All Shares Index is trading is flat with a downward bias. So we're at 39.90. Now, leading the advances in the market, the financials counter, the holding firm services, mining and oil counters are bucking the market's current downtrend, whereas the industrial and property counters are trading in the red. Now, at the foreign exchange market, the peso opens weaker at 58.50 from its previous close of 58.32 against the greenback. Now, our guest this morning will help us navigate the complex dynamics of commercial leasing, sharing insights on market trends, tenant preferences, and the evolving demands in office and mixed-use spaces. He'll also talk to us about how economic shifts, technological advancements, and emerging opportunities are shaping the future of commercial leasing here in the Philippines. Now, with us is Miko Baranda, the Director of Commercial Leasing at Lichu Properties. Hi, Miko. Good to have you.
Good morning, Maiki. Thank you again for having us today.
Okay, Miko, we just got October inflation yesterday that came in at 2.3% within the expectations of the BSP, which was for about 2.2%. something to 2.8%. Now that coupled with the BSP's dovish stance on monetary policy, interest rates have come down by 50 basis points since August. The cut in the reserve requirement ratio of banks, steady growth, ADBC's growth at 6% for 2024. Against this economic backdrop, how would you describe the current environment for commercial leasing in the country?
Yeah, so a lot of good news there, Mikey. And just to reinforce it further, the Philippine economy continues to be one of the fastest. We've heard that from HSBC, earlier reported, the World Economic Forum, a lot of good reputable institutions saying a lot of good things, believing in the growth story in the Philippines. We track a lot of the growth drivers. The IT BPM sector today continues to be one of the largest driver for the office sector. They're at 1.8 million full-time employees, the largest employer in the entire Philippines, and that keeps on growing, and the roadmap is to grow that to 2 million, 2.2 million soon. The remittances at $35 billion, fueling the residential demand, and hopefully we should have a very strong leg, which could be the hospitality sector. But diving into the commercial property specifically, for the first 9 months of the year, we've seen an increase of 11% compared that to last year. That's about 900,000 square meters of leasing demand. And what we've done also a little bit differently is really just to dissect the demand and understand it a bit better. What's motivating tenants to lease space? Okay,
interesting. Dissecting that demand. You said that the main driver for growth in commercial leasing is still the IT BPO industry. IT BPM industry. Is that mostly on multinationals? How much of that mix is from the multinationals?
Yeah.
Of course.
I think a large part still of the IT BPM industry is driven by the third-party vendors, but we do still see a lot of captive shared services that are already here, whether they're banks that are expanding, financial institutions. But what also we're witnessing as of recent months is that there are new players, new companies that are very big in the US that are looking at the Philippines to offshore, to outsource as a way to either save their bottom line, save revenues, and really just look at the Philippines as a potential place that they can scale their business in.
Okay, that's interesting. You mentioned that the growth in commercial leasing, that's 11% year to date. How does that compare from your targets for the full year 2024?
I think we're on target. We've actually exceeded the target a bit. And usually the last 6 months, or at least the next 3 months, usually is the strongest when we look at the leasing activity year on year. So we expect to breach 1 million square meters by the end of the year. But again, I think what we're witnessing now is that tenants are not really just superficially moving from one building to another, meaning they're taking more space. It used to be flight to quality, and it's really just lateral growth. Now we're seeing companies that have adjusted in their work styles, and they're at the point in time that we're needing more space, and we're seeing that activity happen as of late.
Okay, interesting. So the motivation for the leasing activity, for the growth, the 11% growth year to date, are these lateral movements, or are people really growing and expanding?
Both. So there are lateral movements, meaning there are in buildings that are in grade B, or at least very old buildings, and they're looking at the opportunity now to upgrade their premises, seeing that there are ways to capitalize in the market today given the vacancy levels. And we're seeing that shift to more modern new buildings, but at the same time, a lot of growth, a lot of tenants that are actually needing more office than what they currently have at the moment.
What's the mix of people needing more office than what they currently have? There is the IT BPM sector, which is a main driver. There also used to be the POGOs, which was a main driver up until they got banned. In terms of traditional offices, who's taking that up?
Yes, so for the first 9 months, a quarter of the traditional office demand is attributable to government companies or agencies specifically. So many of the government agencies that are in older buildings are now looking at the possibility of, some of them have already relocated into more new modern buildings, upgrading their lease premises, upgrading the branding. It really just, I guess, is a way to help them uplift the agency's brand and to also give promise to those that are trying to employ these agencies.
Another thing I wanted to talk about, vacancy rates in the country. They've been elevated for the past 3 to 4 years at double-digit levels. In terms of supply and demand, what is your take on the vacancy rate situation in the country?
Yes, so vacancy rates today is at 17%, 18%, and it's been hovering in that level in the last 3 years. And the reason why that is that it's not because demand is slow. We've actually seen demand increase year on year, but also supply has increased at the same pace, meaning that many buildings that were supposed to be completed in 2020 or 2021 are all being completed in the last 3 years, all clumped up just because of the delays in construction, the COVID pandemic. So it's not because supply is demand is weak. It's because supply would just keep increasing, so it would cancel out the demand. Yes. So we're not seeing it as a demand problem, but more of a supply issue, which we feel time will heal over. It will be healed over time. So given that most of the injection of supply have happened in the last 3 years, it cancels out every single square meter that's taken in the market. Hence, vacancies are flat. But what's promising is that we expect that supply will start to go down in 2025. And given that the trajectory of demand is in a upward trajectory pace, we will see vacancy levels start to taper off.
Okay. That said, what's your outlook for prices, for commercial leasing rates?
Yeah, I believe at the moment now, there's still a lot of motivation for developers to get tenants. It's still 18% is still a large vacancy, but also we want to look at vacancy levels on a per district basis. So some districts are actually already experiencing single-digit or close to single-digit vacancy levels, like the main core districts like Bonifacio, Makati will soon enter that phase, and then followed by the other districts. So it really is depending on a per location basis. We'll talk about the rates.
Talking about location and core districts, are you seeing a decentralization of commercial leasing hotspots with demand spreading beyond traditional business districts like Makati, BGC, Alabang, Ortigas? What are the factors driving companies to seek hubs outside of these traditional districts?
The trend's been happening for the last decade, where we've seen that's driven mainly by the IT BPM industry looking for new labor markets. It's all about talent, scalability, where they can operate in other districts and hire, let's say, new set of labor and talent. So we have seen that happening all over the countryside. No longer just also Cebu, not just Davao, in Visayas and Mindanao. Hence, given that the demand is there, we've seen that supply also, meaning developers are heavily investing in those places, either township developments, building proper office buildings, and that really just changes the landscape of these provinces also.
Speaking of another trend, the pandemic induced a trend of remote and hybrid work engagements.
Yes.
How much of this trend is here to stay? How much of remote and hybrid work in the commercial space is here to stay? And how much has that affected commercial leasing, the demand for properties?
Yes, hybrid has of course had an influence in terms of the velocity or volume of demand. And what we've seen now is that many companies have already adjusted to what that proper setup would be in the last 18 to 24 months. They have a better feel of what works for them, what doesn't work for them. And now that, given that we see the demand motivation for tenants expanding, is that they've already somehow adopted to what works, whether it's a 50-50 shift from hybrid remote to on-site. And nowadays, it's really more of we're seeing growth in terms of activity.
Speaking of what works and growth and activity, in the past, there was a trend for sustainable buildings, LEED certified buildings. Do you see that the companies that invested in LEED certification are reaping the benefits of those investments? And is sustainability a big cornerstone for especially multinationals that look to hold office in the Philippines?
Yeah, I guess just kudos also to the early adopters, developers like the Rufinos, the Neo Group, Arthurland. They've invested in sustainability from the very beginning, even though tenants weren't really looking for it. Whether it's a certified green building under LEED, Verde, and even WELL, where you're looking at just even the breathable air, how healthy a building is. And nowadays we're seeing, especially for multinational tenants, as part of their checklist, they do put value in these kinds of buildings when they select properties, if the building is sustainable, whether the inhabitants or the employees that will be working in these buildings will be healthy. And we're also now looking at maybe another shift where companies are also looking at buildings that are smart. So very recently, Wired Score, another certification vehicle, just got introduced here, really just to ensure tenants that these buildings are viable for the future. It has the technological needs to support tenants that are or occupiers.
It's good to hear that what was once a nice to have is now a must have. All right, thank you for your time, Miko.
Thank you so much. Thank you for having us.
That was Miko Baranda, the Director of Commercial Leasing at Lichu Property Consultants. Now we're taking a quick breather. Basis Points will be right back. Welcome back to Basis Points. Branches of TGI Fridays in the Philippines will not be affected by the American restaurants filing for bankruptcy in the United States. That assurance coming from the Bistro Group, which holds the Philippine franchise for TGI Fridays. Its president, John Paul Manood, stresses the franchise in the country is not only stable, but also thriving. He says they even have plans to launch 5 new locations next year. TGI Fridays recently filed for bankruptcy in Texas as it struggles with mounting debt and a steep drop in customer traffic. Now, Megaworld's president, Lourdes Gutierrez Alfonso, makes it to Forbes Asia's list of Power Businesswomen this year. She is the only Filipino on the list, which honors 20 influential executives from across the Asia-Pacific region. Gutierrez Alfonso became Megaworld's first female president just this June, succeeding Andrew Tan, who founded the company in 1989. She joined Megaworld in 1990 and has taken on various roles, including Chief Operating Officer. Gutierrez Alfonso has an estimated net worth of $1.9 billion. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.